Welcome, dear traders. It's me, Kate Stichin, and you are watching a recap of the Asian session. In the first half of the week, stock markets were mainly in the red. The US benchmark stock indexes keep falling after a rollback that started last Friday. Yesterday, European equities slid down as well. Asian stocks took a nosedive in the morning. After a recent rally in a stock market, some traders prefer to lock in profits. However, they remain cautious ahead of the comments from the Fed policymakers. They are also awaiting Jerome Powell's speech. He will testify before the Senate Banking Committee today and tomorrow. Investors are sure to look for clues in his speech about the next steps in monetary policy. Inflation in the key parts of the U.S. service industry remains elevated and has not shown signs of easing, the Fed said in its latest monetary policy report to Congress. Investors will soon find out whether the central bank remains committed to a hawkish stance. According to the CME FEDWATCH tool, 79% of speculators believe that the Fed will hike the key rate only once next month before ending the tightening cycle. Perhaps some of them changed their minds today after the release of an unexpectedly strong data on the housing market. Figures for May rose markedly, so the Fed may continue to raise rates as the economy remains resilient. The US dollar went up amid expectations of a further tightening and strong US market starts. In Asian trading, the greenback jumped to 102.60 versus its main rivals. Jerome Powell's rhetoric is expected to be hawkish. In the morning, the US dollar was moving in the upward range of 102.50 and 102.70. Despite a steady increase, the greenback is trading in a narrow price corridor. Besides, it's quite volatile. As the American session approaches, the tension is growing. So, before the speech and news releases, the US dollar could easily break out of this range. The yen usually dips amid a stronger US dollar. Nevertheless, this morning it did not change trajectory despite a rise in the US dollar. It was trading at 141.30, while the US dollar is growing in anticipation of the Fed's hawkish comments. Japanese financial officials have already spoken out. Their remarks were the main reason for the depreciation of the yen. Bank of Japan Governor Kazuo Ueda said today that the regulator would adhere to an ultra-loose monetary policy. However, one of the Bank of Japan's governors noted that the monetary policy prospects also depend on the state of the global economy. Commenting on inflation forecast, Seiji Adachi noted that in the case of its increase worldwide, domestic prices in Japan will also go up. If so, the regulator may determine the timing of a policy reversal. If goods prices do not decrease by summer, the Bank of Japan may need to reassess its baseline scenario, he said. Following the dovish comments from a Bank of Japan officials, the dollar-yen pair rose to the resistance level of 142. Bulls are ready to test the annual high of 142.25. In the Asian trade, the pair gained upward momentum, moving in the range of 141.20 and 142.10. After a rollback from the high yesterday, the pair may reach new highs today. If the pair consolidates above 142.55, a new pullback will hardly take place. The majority of the analysts expect the yen to fall lower against its rivals. The Australian dollar also dipped to the support level of 0.6760 due to the cautious trading ahead of the Jerome Powell speech. In the Asian session, the AUD-USD pair was moving in the downward range of 0.6760 and 0.68. However, on the early Wednesday, bulls tried to take control of a 0.68. However, the Australian currency was facing bearish pressure after the publication of a less hawkish than expected meeting minutes. The Aussie was unable to rebound due to various bearish factors such as the risk aversion, falling oil prices, and weak yuan, and expectations of a hawkish statements from the Fed. At the end of the Asian session, the pair consolidated at 0.6760. Its further trajectory depends entirely on the exchange rate of the US currency. Risk-sensitive currencies are affected by concerns about the global economic downturn, especially in China, and these fears are fueling demand for safe haven assets, pushing commodity currencies down. Therefore, New Zealand dollar was also trading mainly in the downward price corridor of a 0.6157 and 0.6187. However, a fall in the yield of US Treasury notes limits the upside potential of the US dollar given these contradictory factors. The Kiwi-dollar pair was very volatile at the end of the Asian session. The decision of the Reserve Bank of New Zealand and the end its most aggressive tightening cycle since 1999 boosted bearish sentiment, and this is why a further decline looks more likely. That's all for now. Hit the subscribe button and keep close tabs on the market developments with us. And see you soon.